250 years ago today, 13 ragged colonies told the mightiest empire on earth that its permission was no longer required. Happy Independence Day, Warband. This is Saturday, July 4th, 2026, the 250th birthday of the boldest exit in history. And this morning's tape says the fight for independence never ends. It only changes weapons. Start with the anchor. As of just past 5 Eastern, Bitcoin trades at 62,400, up about 1.5% through the night. A third straight day of higher ground, now roughly 8% off the midweek floor, near 57,800. 3 days does not unmake a brutal June, but a floor that keeps refusing to break starts earning a different name. The engine spoke once overnight, and it spoke a warning, not a blessing. At 4 o'clock this morning, Eastern, the InvestAnswers Decision Support System through Ethereum mean reversion overbought, with the coin at 1760, the same flag it planted on Solana Thursday evening. Read the pattern plainly. The relief rally has now sprinted far enough, fast enough, that the mean reversion math calls it stretched, while the trend side of the same engine still refuses to mark Bitcoin green. A bounce the engine calls stretched before it calls confirmed is a bounce you respect, not chase, and carve one figure from the chain into the doorpost. By Glassnode's count, close to 11 million coins now sit underwater against just over 9 million in profit. That crossover, more of the supply in loss than in gain, has appeared only a handful of times in Bitcoin's history, and each time it marked the neighborhood where a major bottom was carved, not a bell. Bottoms do not ring them, but the neighborhood looks familiar. New York's desks stay dark until Monday, so the weekend belongs to the assets that never close. The regime is telling you one thing: the bounce is real, the blessing is not. Let proof set your hand, not hope. Now to Miami. On Thursday, no stage, no live stream, no founder holding a microphone. Tesla switched on unsupervised robotaxi service in its first market outside Texas and California, a geofence of roughly a dozen square miles across western Miami-Dade, West Miami, Doral, Coral Gables, with Model Ys threading the streets carrying nobody in the driver's seat and nobody riding shotgun with a kill switch. No driver, no safety monitor. Florida becomes the third state on the map, and mark the quieter beat beside it. Dallas and Houston now run fully unsupervised as well. Austin runs a mixed fleet, and only the Bay Area still keeps monitors aboard. The training wheels are coming off the whole map at once. Community trackers, unofficial counts, but the best available, now put the Texas driverless fleet north of 100 cars. Step back and read the last 30 days as one motion, a regulatory filing to run 8 cities across the Phoenix metro. Production cybercabs with no wheel and no pedals threading downtown Austin. A Las Vegas depot retrofitted behind an application to run thousands. And now a third state switched on, the Thursday before a national holiday, as casually as a software update. Because that is what it is. Empires used to announce their conquests. This one updates the app. The purpose-built cybercab is slated to join these fleets once volume production ramps later this year, which means everything running today is the old tool doing the new job. Here is the second-order read. The cost of standing up a new city is collapsing toward the cost of the cars themselves. When expansion gets that cheap, the constraint stops being permission and starts being production. That is what a scaling curve looks like from the inside, and most of the market has not looked. Now the abundance trade, because the king of it just changed how it sells. On Wednesday, Nvidia unveiled a revenue-sharing model for its chips, token credits and cloud capacity partnerships that let model builders rent the future instead of buying it. No upfront hardware bill. Nvidia books its chip revenue, then takes a cut of the cloud revenue those chips go on to earn. First Partners, an Australian outfit running 40,000 of the newest chips, and another in Indonesia. Set that beside what you already know. 3 days ago, I showed you the price of the chip hour falling by nearly a third in 3 weeks. In mid-June, Nvidia sold $25 billion of bonds, its first debt raise in 5 years. And on Thursday, while the Dow closed at a record, the chip complex bled. SanDisk down better than 10%, Applied Materials down 10%, profit-taking on names that ran better than 80% in the first half. Now hear the old read, and mark it as a read, not a wire fact. When the vendor starts financing the customer's purchase, the cycle is aging. Telecom ran this play in '99. Equipment makers lending carriers the money to buy the equipment, booking the sale, keeping the risk. Be plain about the other side. Nvidia is no relic of '99. The demand beneath it is real and the earnings are monstrous, but structure is signal. A vendor invents new ways to pull demand forward at exactly the moment the marginal buyer stops paying cash. The engine spent 2 weeks cutting the abundance names to red while aiming its strongest calls at metal and energy. Thursday, the tape agreed. Now, the vendor's own behavior agrees too. Late innings are not a crash. They are when the disciplined walk toward exits the crowd has not noticed yet. One more thread, and on this day, it lands heavy. Earlier this week, Jordi Visser published a piece arguing the internet is entering its third phase, machines as buyers. Artificial intelligence agents graduating from tools to autonomous purchasers. You set the spending policy, the agent executes it. His point is structural. The card rails were built for human hands, and machine commerce needs programmable money. Stablecoins, tokenized dollars, settlement at machine speed. He calls that shift the thing that makes tokenization inevitable instead of speculative. The live experiment is already running. X Money opened to its broader verified base at the end of June. Now follow the logic one step past Visser. A machine cannot hold an account that requires a permission slip. It can hold a bearer asset. Every rail in that stack eventually asks the same question. What is the reserve that nobody can freeze, debase, or vote against? 21 million coins. No chair, no committee, no ceremony. Michael Saylor put it his own way on Thursday, defending Bitcoin's governance as dynamic consensus among nodes, miners, and holders, no throne to capture, and saying he sees no reason it cannot reach 5 billion people. 250 years after the first declaration was signed in ink, the second one is being written in code. So, the weekend watch, Warband. The rocket empire worked straight through the holiday. 6 Raptor engines lit for a full minute Thursday on the next Starship, clearing the road toward the V3 ship's second flight as soon as next month. And Tuesday, that company enters the Nasdaq 100, where the index must buy what the crowd still debates. Monday, the desks reopen. Watch whether the fund inflows chain, whether 62,000 hardens into ground instead of ceiling, and whether the engine finally marks the coin green. And if the overbought flags cool this bounce first, that is the math doing its work, not the thesis failing. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Independence is never granted and never finished. It is stacked, sat by sat, mile by driverless mile. Hold the long horizon. Stay free.